Hello, my friends! We have seen the housing values increase substantially over the past decade or so. Many investors may be thinking about selling their properties to capture some of those gains. The common question is, how can I do so while minimizing capital gains tax? One option may be to look into something called a 1031 exchange. This is a tool that is used to defer capital gains tax. Want to learn more? Well, good news. We have Ling back, who will give us a quick overview on what it is, the benefits, rules, and make sure to stay tuned until the end of the video to learn a bonus strategy on how you may never have to pay capital gains tax. Let's go!
I want to share with you my very first 1031 exchange story. Back in 2017, I bought a single-family house in Casa Grande, Arizona. This house had a 4-bedroom, 2-bath, approximately 1,200 square feet. It was built in 2007, and I paid $115,000 for it. The location of the house is okay, not the best, about 12 minutes away from highway. I was able to rent it out for $1,250 per month with a net cash flow of $815. At the end of 2020, I noticed the house value had gone up drastically. I started to think whether it makes sense to trade it up for a newer and better location. I can take advantage of the appreciation as well as learning how 1031 exchange works. The inventory was not as tight as right now at the time. I was still able to find builders who were selling houses to investors, so I was able to identify the replacement property fairly quickly. At the same time, I also did extensive research on 1031 exchange companies. I then put a house on market for sale and sold it for $175,000. The replacement house I purchased is in the same city, Casa Grande. This house has 3-bedroom, 2-bath, about the same square footage, 1,200 square feet. It was brand new built in 2020. The location is much more convenient, only 4 minutes away from highway. Because of its new condition and the location, I was able to rent it out for $1,500 per month. And the net monthly cash flow was $1,005. Throughout this process, I have learned a lot. Let me first share with you the benefits of 1031 exchange, and then I will walk you through the step-by-step process of how I got it done. The first benefit is you're able to defer your capital gain tax. Let's use the same property as example. I purchased a property for $115,000 and sold it for $175,000. Let's put all the commission and closing costs aside for simple math purposes. The net gain from this investment is $60,000. Since I held on to the property for longer than a year, that would mean I am responsible for long-term capital gain tax of that $60,000. And depends on my income level, I would either owe 15% or 20% tax. Since I have used 1031 exchange to purchase the replacement property, I no longer have to pay the capital gain tax for the year of 2020. And the amount of money I'm supposed to use to pay for the tax is still being invested within the property to continue to grow its value. The second benefit is to effectively use the equity you have built from the previous property and trade it up for a higher value one, and ultimately increase your cash-on-cash return as well as equity position. Let's use the same example for both cash flow and equity comparison. The replacement property, because it was very close to highway and also a brand new build in 2020, I was able to rent it out for higher rental amount. As a result, the net cash flow per month was almost $200 more than the original house. And that equates to a total of $2,280 per year increase on cash flow. When I checked the value earlier this year in 2022, the replacement house is valued at $305,000, whereas the original house is only valued at $225,000. And that's a difference of $80,000 more in equity position.
All right. Thank you for sharing your story, Ling, on what you actually went through with your first 1031 exchange. It really paints a picture on the progression and the benefits of doing this type of transaction. Well, what do we do next?
Now I will walk you through the end-to-end process how I got it done. After I had the idea of selling the existing property and trade it up using 1031 exchange, I did extensive research on how 1031 exchange works. As part of the analysis, I also crunched my numbers to make sure it made sense. After the closing, the QI company held on to the proceeds from the sale so that they can step in and assist me with my purchase of the replacement property. Within a few days, I received a DocuSign email to inform the QI company my replacement property. I had 45 days to identify my replacement property. Now don't worry, I will walk you through the detailed rules of the timeline. Since I already know which property I was going to purchase, I filled out all of the detail in the DocuSign email and sent it back to QI. They were also very helpful. Any questions or clarification I needed, they were very responsive. During the closing of the replacement property, I once again connected my QI contact person with the title company to make sure all of the 1031 exchange documentation were aligned. 2 days prior to closing, QI also sent me an authorization letter via email so that I can sign off to allow them to use the proceeds from the selling of the previous property for the closing of my replacement. I then went through the closing just like any other purchase closing, signed off on all the documentation, and wired the portion that's not covered by the proceeds from the previous property. Within a couple of days from the closing, I received a final closure statement from QI, which detailed exactly how much they paid on my behalf from the proceeds of the previous property, as well as the fees that they charge for this service.
All right, great job on going over the end-to-end process in a way that I can even understand. Now, could you summarize the 1031 exchange rules on how to do this correctly without incurring the capital gains tax?
Yes, I will be happy to. There are some very strict rules that you have to pay attention to. I mentioned qualified intermediary. They are the 1031 exchange companies. They're acting as a middleman that holds the proceeds from the sale of the initial property and then transfer the proceeds to fund the purchase of the replacement property. Now remember, you cannot handle the money on your own, which means you have to identify the qualified intermediary before the close of your initial property. Their fee is usually around $850 to $1,000. If you purchase more than one replacement property, then there could be additional fees. The second rule is you have to purchase a like-kind property. What that means is you can trade a condo for a single-family home. You can trade a single-family home to multifamily and apartment building. You can also trade a multifamily to a commercial building, as long as they are a like kind, which means property to property are considered like kind. But if you trade a property to stocks or property to artwork, these type of transaction would not qualify. The third rule is the same person or entity needs to take title as how the property is sold. For example, the original property only had my name on the title. When I purchased the replacement property, the title has to be my name only. I cannot add my spouse, my sister, or my mom on that title. The next one is equal or greater value. I'm going to introduce a new vocabulary, the relinquished property. The relinquished property is really just the original property that I sold. So what this means is if I use $100,000 to purchase my original or the relinquished property, then the replacement property purchase price has to be at least $100,000 or greater than $100,000. Please keep in mind if you carry a mortgage, the mortgage amount also needs to be equal or greater in value. For example, the same relinquished property that you first purchased for $100,000. Instead of paying cash, you put down $20,000 and carry a mortgage of $80,000. When you trade up this relinquished property for a replacement, the replacement property purchase price has to be at least $100,000 or greater than $100,000, as what we indicated in Rule A. In addition, the replacement property's mortgage also has to be equal or greater than $80,000. The last one is a timeline rule. It's not as easy as it seems, especially in today's market when we are experiencing extreme shortage of inventory. You do want to take the proactive approach to search for the replacement property ahead of time. The 45-day rule states you must identify your replacement property within 45 days. What this means is, right after the closing of your relinquished property, your qualified intermediary will send you a document to fill out. On this document, you will need to disclose the potential replacement property that you're planning to purchase. You have 45 days to complete this task. Once you have exhausted the 45 days, you will not be able to make any modification to this document. The 180-day rule states you must close the replacement property within 180 days from the closing of the relinquished property. The only scenario I can think of this may become a challenge is if you're purchasing a replacement property from a builder. Right now, due to the shortage of supply, a brand new construction home may take longer than 180 days to complete construction. If that's the case, you may not be able to make the date.
Okay, if any of you are looking into doing a 1031 exchange, I highly recommend you review this video again, especially this section on following the rules and guidelines. Also, if you have any specific questions regarding any of the rules, please leave a comment below. Ling, what else should investors be aware of?
All right, what are some things to watch out for? First, the 1031 exchange rule only applies to investment properties. Your personal residence or fix and flip do not qualify. Number two, we talk extensively about the timeline that you have to follow, the 45-day identification rule and 180-day closing rule. You must follow the timeline rule. Otherwise, you may have tax liabilities. The next one is very important. QI companies are not federally regulated. Please do your due diligence to identify the reputable companies to work with. Lastly, during the 45-day identification period, you may identify more than one replacement properties. You do need to follow the 95% and 200% rule. I didn't go into detail discussing these two rules. If you have any specific questions, please leave a comment below. In the bottom of the slide, I have also included the different structures of 1031 exchange. I have only used the first structure, which is to sell the relinquished property first and then purchase the replacement.
All right, you mentioned earlier there's a bonus strategy. What is it?
Is there a way that you potentially never have to pay capital gain tax? Perhaps there is a strategy. Let's use the same example to demonstrate. In 2007, the first property was purchased for $115,000. In 2020, we sold the relinquished property and replaced with a new one for $181,000. The current value as of 2022 is $305,000. Let's assume by next year, 2023, this property will be worth $315,000. At that time, we will sell the current property and trade it up for a triplex. Fast forward 40 years in 2063, based on an estimated average 3% per year appreciation, the same triplex would have a value a little over $1 million. You can leave the triplex to your children or grandchildren as part of the inheritance. After you pass away, when your children take ownership of this triplex, their cost basis is no longer the $115,000 as the first property that we purchased. Their cost basis would be the current market value of the triplex, which is somewhere around $1 million. If they decide to sell the triplex right away, they would not incur any capital gain tax. Please keep in mind this is based on 2022 capital gain tax rules and regulations.
Alright, I hope you all enjoyed watching this video on how 1031 exchange works and how you can utilize it to help you and your family. If you haven't already done so, please make sure to subscribe to this channel so we can continue posting more videos like this for you in the future. Smash the like button and hit the bell for notifications. See you all very soon. Bye.